You are listening to Charting Wealth for Thursday, the 16th of June, 2016. Well, what do we have going on? We've redrawn our trend lines as the market has continued to move down. We have two-day candles with lots of down movement. We've redrawn our trend lines on those two-day candles, and the market is well below those trend lines. Remember, if you want to know how trend lines are drawn, I encourage you to go to chartingwealth.com and go to our training there. Under training, you will see trend lines, and we will explain to you and show you exactly how to draw them. Bottom up, top down is what you need to remember. When the market's going down, you draw the trend line from the top. When it's going up, you draw it from the bottom using your candlesticks. Now, we had a crossover on the 15th going down. We have a confirmed crossover. Market was down for the day. This is the total market as depicted by IYY, the iShares Dow Jones U.S. Total Market Index Fund, an exchange-traded fund, down 0.14%. The derivative oscillator is still in the positive. We like it when everything switches at the same time. We would like to see the MACD cross over the signal line, the blue MACD cross over the red signal line, and at the same time, the derivative oscillator go from green to red as it did back between the 2nd and the 4th of May. But even back then, we didn't see it occur at the same time. Derivative oscillator switch occurred after the MACD. We like them to happen at the same time. Two big down candlesticks, down wicks below those. Those are the strongest down signals we have on the candlesticks. You want to learn more about the kind of candlesticks we use, the Hinkin Ashi, which means average pace in Japanese. What are those candlesticks all about? They're not your standard open, close, high, low. They're calculated differently. We have a great, again, instruction on the website. Go to Charting Wealth. You will see it. And you can also find it on our YouTube channel, which again is Charting Wealth. Want to help us out? Go to the YouTube channel and subscribe. We're getting closer to 1,000 subscribers. Now we have thousands download and we have thousands watch our YouTubes over the course of time and download us throughout the week on iTunes. But with YouTube, if we get 1,000 subscribers, that is people who actually click to subscribe, once we hit that 1,000 mark, and we're closing in on that with your help, we've gone up like 30 or 40 in the last day or so. We want to get to 1,000 because then we can do proprietary broadcasts, and that gives us a lot of other options. So help us out there. Now, what do we see going on the 4-day chart? You see on the 4-hour chart, you see that during the course of the day in the morning, the Hinkin Ashi was up, showing the average pace changed, moving up. And then you saw also that in the afternoon, we had something called a doji, very close to a doji, not really much of a spinning top, almost flatlined. It means the market opened and closed at about the same point on the Hinkin Ashi. What do we see going on? Derivative oscillator is losing its downward momentum. That's shown by the halt we've seen over the last day, that is on the 15th. And the MACD, there was a bit of a hiccup there in the morning where the market opened with an up move, and then it continued to parallel its downslide. But the derivative oscillators lost some speed. So, those of you who are looking for backups in going down, maybe that's what occurred in the morning, and then a lot of indecision in the afternoon. Let's see what happens as we continue to play through all of this. Now let's go back to our 2-day chart. We're going to take a look at the S&P 500 as depicted by SPY. What do we see going on there? Well, again, somewhat similar to the total market. There was a crossover going down on the 15th. We have two big down candles, redrew our trend lines. We're below those. If we look at our 4-hour or half-day chart, we see a true doji in the afternoon. It looks like a cross on the screen. Lots of upward movement, not quite as much down movement as upward movement on the wicks, and we had upward movement in the morning. We do see the derivative oscillator losing its downward energy, so we do have a bit of a backup. Those of you who are looking for that on the candlesticks, looks like you have that there. So Not saying there's a launch point. We typically like to see a pullback on the MACD, but for those of you who are, again, training, learning, wanting to experiment, you might experiment on that, see how that does for you. And again, just as the caveat, we are an education company. We are not a stock calling service. We are not giving trading advice. Our advice is not there. We're simply saying, hey, if you want to learn to read the stock charts, set up a virtual trading account at any of the online brokers. You can do it for free. And TD Ameritrade, Charles Schwab, Options Express, whatever it might be, set up an online virtual trading account with fake money and then get in and attempt to enter trades, make purchases, make yourself a millionaire virtually overnight, and then see if you can make yourself into a multimillionaire. Once you learn how to read these charts and get good at it, then you can come up with your own scheme and do your own investing and your own trading. But we don't make those calls for you. We do try to train you and have you learn some techniques. That's what's so important, because once you spend the time doing this, and you've got to spend the time, my friends, you can't simply do this overnight. And now, again, any fool can get into a market that's crushing down and ride that. Anybody can get into a market that's crushing up and ride that up. That does not make you a player. That makes you lucky, and lucky will kill you. Learning and being a professional about it and having rules and following those will make sure that you have longevity. But again, you will get slaughtered very quickly in the market, thinking you're a genius because you jumped in when the tide was coming in. A lot of times I see folks that just jump into the markets think that all of a sudden they are God's gift to the stock market. Let me tell you, the market has quite a leveling effect. Okay, again, SPY down 0.14%. About twice that, a little over twice that, the Qs, which is the NASDAQ 100, it was down 0.29%. Crossed over, going down on the 15th. Derivative oscillators not yet switched. Looks like it's getting close. Again, the Qs, the NASDAQ 100, was sliding sideways for a while, never even got above its height on the 1st of June and slid all the way across until it really started trundling down on the 13th. Actually topped out again right around on the 9th and then started really moving down on the 13th and then again on the 2-day candle on the 15th. Now let's look at our 4-hour chart, see what we see. We again see that it bottomed out really on the morning of the 14th and has slid sideways since then. And again, those of you who are looking for just pullbacks on the candlesticks, that's what you see occurring on the afternoon of the 14th and the morning of the 15th. Lots of indecision on the afternoon of the 15th. Where's this market going to go? Well, the downtrend, it's below the 2-day trend line. The downtrend is set on our large chart. Now, can it roll over and go back up for a while and break that? Of course it can. But again, we always look to the big chart to tell us what the trend is, what the big wave is doing. All right, lastly, after doing the total market, the S&P 500, the NASDAQ 100, what do we always do? We look at gold. Gold was up 0.74% for the day. Gold has been jamming up since the 3rd of June, crossed over going up on the 13th. At the same time, this is what we like to see. We like to see the MACD and the derivative oscillator flip over at at the same time, which they did on the 13th. And they've continued to move up. Now, if we look on our 4-hour chart, what do we see going on? Well, we talked about this yesterday afternoon. Actually on the 14th, when we were preparing the broadcast for the 15th, we talked about the red candle that ended the day. Was that a pullback of sorts? Well, it was another pullback a bit in the morning and then took off again in the afternoon. Gold up again 0.74%. Those of you who are looking to find other pullbacks instead of waiting for a complete rollover of the MACD over the red signal line going down and then it moving back over, going up. Again, we always look for a pullback. Just to briefly explain, because I know we have people joining us from all the time from all sorts of different places, some with experience, some without. What we're looking for is we are trend following, okay? When we look at the 2-day chart, and none of this is complicated. I mean, again, what's complicated is learning over time to do all of this and not trusting your gut, but trusting what the charts show. So what do we see? We see a big uptrend. We see a crossover going up on the 13th. So we have a confirmed crossover starting then. All right, that's on the 13th. Now, what we typically do is we wait for a confirmed crossover on the MACD. We feel even better when the crossover's on the MACD and the derivative oscillator at virtually the same time. Once we have a confirmed crossover, we then draw ourselves a new trend line. We try to connect 3 candles, which we've done. Then we look for a pullback. What is a pullback? Well, a pullback, we go to the 4-hour, our shorter chart, and we wait. If the market has been trending up, we wait for it to move over in the opposite direction. And I'm circling for those who are watching, those of you who are listening. There was a pullback back on the 5th of May. Well, we wait for a pullback, that is a movement in the opposite direction, and then once it corrects itself and starts moving back in the upward direction, we hop in. You don't always have a pullback. It just doesn't always happen. Sometimes the market will just charge up on the 4-hour chart just like it charges up on the 2-day chart and doesn't turn over going down until everything's going to go down on the big chart and the small chart. But you will have occasional pullbacks. When you have those, that's the safest way to get in. I've been asked over the last many weeks, hey, are there other ways to get in sooner than the most safe way of waiting for a pullback on the 4-hour chart? My answer is there are other ways, yes. One of them is to wait for the candlesticks to signify a pullback. And the Hinkin Ashi candlesticks, I think, are more reliable than your typical candlesticks because they show you the average pace changing. And we saw that over the course of 2 candlesticks on the afternoon of the 14th and the morning of the 15th. And then the pace changed and started moving up again the afternoon of the 15th. So a potential pullback we saw was in the afternoon of the 14th, morning of the 15th. And when that changed back over, possible chance to jump in and ride that pony up the hill. So again, try that. You're using virtual money. You know, we're not a stock calling service. You don't have anything to lose except a little pride. And let me tell you, no pride is allowed in the marketplace. We will take our licks and we will learn and we will keep trying. We do not screw ourselves over emotionally with pride or any other thing. Our job in the marketplace is one thing and one thing alone, and that is to learn and to make money. That is where we ended the market on Wednesday as we go into Thursday, the 16th of June. We love to hear from you. If you appreciate what we do, what we talk about, we always appreciate the high marks that you give us on YouTube, the high marks that you give us on iTunes. We really appreciate your subscriptions on iTunes and on YouTube. Of course, they're free. That really helps us in the metrics. It also helps to give us thumbs up and on YouTube, and to subscribe to the channel, incredibly helpful. And also on iTunes to give us a 5-star rating and say something nice about us. We appreciate that. That's about all we ask for. We do this every day. We love the market. We love what can be done with it. And I'm telling you, in the coming hard economic times, you having the ability to read a stock chart, to know when to get in and out of the marketplace, to know when to buy gold, when to sell gold, when to buy into the total market, when to sell it, when to buy into the S&P 500, when to buy into the Qs, or even better, when to buy into the inverse. They're inverse funds that move in the opposite direction of the market, that you can make money in when the market's crashing. You get this kind of knowledge, you train with us, you learn, you become comfortable with what you're doing, and then you make your own decision up, particularly when times get tough. you are going to be empowered. So continue to train, continue to learn. We're not a stock calling service. We're an education firm. We want you to learn and be able to make your own decisions in the future. Thank you so much. Let us hear from you at chartingwealth.com.